Dow, S&P, NASDAQ, though, hitting some record highs again today. David Kelly joins us here at Post 9, JP Morgan Asset Management Chief Global Strategist. Good to see you, David. Thanks for coming in. It's funny that one of the quips today is, well, we no longer have to worry about the split between the soft survey data and the hard data. Yep. They're kind of converging here.
Yeah, that's right. I mean, we always look at the jobs market as a mosaic, but all the numbers this week were telling us it's getting softer, and we know it's getting softer. And part of it, the issue is a lack of demand, but there's also a lack of supply because of the immigration crackdown. And that's why we're getting these very weak payroll prints. But what's going on is, the economy's not in recession yet, but it's slowing slowly. It's very consistent across all the data. It just shows this economy it was always a bit of a tortoise, and it's now a tortoise that's pretty much out of breath.
All right. Some are throwing in, say, construction spending down year on year as another recessionary signal. When do you think that hits some kind of critical mass?
Well, when we talk about recessionary signals, the most important thing is don't think about this like the pandemic recession or the great financial crisis. Those were mega recessions. We are sort of slipping slowly into this here. I see the market is up today. I think that is, that's obviously reflecting the fact that we think we're going to get some rate cuts out of this, but that's not going to fix anything. The most important thing that I think the administration needs to realize is if you cut rates here, you're going to cut the interest income of retirees. You're going to tell people there are more rate cuts coming, so why borrow now? Let's wait and see. The whole history of the 21st century is rate cuts don't stimulate growth. They didn't in any way after the great financial crisis. So don't look to the Fed to bail out the economy. It can help the stock market, and that's what we're seeing today.
No, it can help. It can bring rates. It can bring mortgage rates down. It can bring. That's been a headwind.
Housing is 4% of the economy.
Well, it's already. Look at the 10-year yield has gone to 4% today.
Yes, but the housing is 4% of the economy. Meanwhile, you've got all these people sitting on retirement income who are losing money because of lower as short rates come down. Plus, all the fear this causes. Why is the Fed cutting rates? Because they think recession. And that adds to the biggest tax that the government levies. The biggest tax the government levies is an uncertainty tax. People don't know tariffs, they don't know immigration, they don't know how to run a business with all this uncertainty, and that is acting as a real lead weight on the economy right now. And honestly, there's no reason why this economy should be grinding to a halt. It shouldn't be. We've got the most energetic, enterprising people in the world. We should be growing steadily at 2%, but I think this uncertainty is really slowing us down.
The uncertainty from
all the changes in policies.
All right, so you're talking trade, you're talking immigration.
Trade, immigration, geopolitics, the dollar. I mean, I know the president and the administration want to change a lot of things, but from a business person's perspective, they need to know who to sell to. They need to know where they can find workers. And this uncertainty, it's people voted, and that's I'm not getting into the politics here, but I am saying that there is a level of uncertainty here which is just causing people to freeze. And that's really what you're seeing. You can see it in the hiring numbers. That's the problem. Businesses aren't laying off thousands and thousands. They're just waiting to see. And the three most deadly words in economics are wait and see. When everybody decides to wait and see, what you see is not good.
But I think you can make an argument, though, that they got certainty on the tax front and actually stimulus on that front as far as expensing, R&D and equipment. I think that there's more certainty on the regulatory front and more friendly regulatory policy. I think that on tariffs, I get the uncertainty. Will they, won't they? Will they stick? Will they be legal? But, what we've heard mostly from companies is that they're figuring out ways to mitigate it, and that they're not actually pausing or changing their strategies or
no. I absolutely, the tax cuts are beneficial for corporations and beneficial for corporate profits. But on tariffs, you know my view on tariffs. I don't like tariffs, but I do think that making a deal with, we made a deal with Japan this week, or we make another deal with the UK, or suddenly we're going to double the tariffs in India. You've got to end it, because if when you look at the manufacturing numbers, how am I going to locate a plant in the US to compete against a foreign competitor when I don't know that those tariffs won't change next week? And so if you're going to do tariffs, do it through Congress, get a tariff regime in place that's going to stay for 20 years, then at least you know the play.
That's generally how it works under the Constitution. Interestingly, you mentioned Congress because there's a headline this morning that Schumer is going to force a vote that would basically try to undo Trump tariffs. We'll see how far they get on that. But I wonder if we do end up with a clash, not just with the courts, but with the Hill.
Well, it's got to be thoughtful, but the most important thing from business is tell me what the rules are. American business is extraordinarily good They're very adaptive. They're very good at growing if you tell them what the rules are. So you're right.
I think that they're hearing what the rules are. The rules are you're going to have tariffs. You're going to have 20% tariffs probably.
But there's a difference between 20% and 50%. There's a difference country by country. And also, I mean, remember, they are a tax on consumers. Now, I'm not saying that we're going to have a recession here. I think we can avoid it. But I do think that some clarity and certainty around these policies would make it easier for business to grow.